Hello, and welcome to another video. I know, it has been over a week already, so I apologize, but we are back with another video and with some exciting news, I'd say, or another record. I spoiled it already in the title. There is another dividend record, but I will get to this. First of all, we do have a few new subscribers, so welcome to the channel. Let me give you a small intro about what the channel is and who I am, what I'm talking about. So my name is Sumit, and I'm basically building side projects and a portfolio to generate some side income, some passive income. I love building, tools for developers, tools for users like you and me. I'm a programmer by day and night, so I'm building these products. And this video is about a particular portfolio that I'm building that is focused on dividend investing. So you see it on the screen. This is a real portfolio that I started in December, and it has 18,300 euro. Is it worth currently? But I put 19,000 in. So of course we have some loss currently, some loss as you can see. Also from the chart here. That goes down a bit. The goal here is to invest 20,000 euro in 2020 this year. And yes, I will reach that probably next month. And I put out a stretch goal of 30,000 euros. So 10,000 more to go for this year to reach the stretch goal. And it will be a bit hard because I have some bigger private things coming up that make it harder for me to invest so much money. But yeah, I will keep trying, and I will keep try to earn more money through side projects. Although that is not the sole reason to do it. And of course to save some money and some cost on my private side to be able to invest that and reach that goal. So the focus of this portfolio is dividends, and in this particular portfolio I'm not picking stocks, I'm not finding out specific companies that I want to invest in. I just choose ETFs that are distributing, so they pay out the dividends that they get from the companies, and they are mostly focused on dividend companies. So we have here the Vanguard All World High Dividend Yield ETF. We have a REIT ETF from iShares, I think it is, yes. Developed Markets Property Yield, it's called. So this is more the, real estate sector. It's a REIT ETF. Then we have the S&P 500 High Dividend Yield. It's a more expensive one, but in general, so expensive, I mean the yearly cost of it are a bit more expensive on ETF, but it also has quite good returns, and it's focused, of course, on the S&P 500, which means it's US based and US focused on the US market. And then we have two bonds or ETFs that focus on bonds. Both are from Vanguard. One is the USD corporate bond, and the other one is Euro corporate bond, which pays out monthly, but of course very, very low. So this is more a stabilizing factor in the portfolio that I have around 5% of my allocation in currently. The plan was originally 10%, but due to the Corona crash, as you can see here, I have no dip. And the reason is because I invested a lot during the Corona times, a lot in comparison to what I invested before. So I basically had no dip in value because I just pumped in more money, but that also deflated, of course, the allocation that I had here for the bonds, which should have been 10% per bond, per ETF here, but it's now at 5% each. And it's okay like this. I will rebalance probably at the end of the year again, but maybe I will just keep it at 5%. I have not made up my mind yet, but anyways, let's get to the dividends. So again, this is a portfolio that is focused on the dividends through these ETFs. And if you look at the dividends here, in my last update, I showed you this one, 45 euros, mainly by the REIT ETF. And this month we are at 120 euros. 120 euros dividends, because both the Vanguard All World High Dividend Yield and the S&P 500 High Dividend Yield paid out, both over 50 euros. And additionally, we had these bonds ETF yielding a little bit like 4 euros together, coming in at 120 euros. And this is amazing. This is money I have not worked for. I have not done anything except putting my money to work. And it actually paid out more this month than the side project Trésor One. This whole tool here is a side project of mine where there is a paid plan, and it was lower than that this month. So this is actually, I'm very, very happy with this kind of payout, and of course the growing rate here. As you can see, it gets higher and higher every month. Of course, next month has to be lower, as both of these, the S&P 500 High Dividend Yield ETF and the All World ETF, they both pay out quarterly. So if they paid out in June, they of course will not pay out in July, and there is no way the others will make up for that. So it will be lower next month, it will be lower the month after that, and after 3 months, so in June, July, August, September, so in September it should be another record. So if I continue like this, if I continuously pay in, continue to buy shares, and the ETFs and the market in general is getting better, let's say over longer periods than just this Corona time, we should have dividend increases as well. So this is a dividend growth portfolio. That means every 3 months we should have another record, and ideally the months in between will also get higher and higher. So yeah, there is not much to say. It's money that I have not worked for, and companies are paying me because I own them. I own a part of a lot of different companies that are part of these ETFs, and ownership of companies is what enables this passive income. So it's quite amazing. It requires a lot of capital, of course, but just imagine if this goes to 50,000, if this goes to 100,000 euros, we are talking numbers here that, you know, could be the car lease per month, or maybe we get at some point where it pays a rent. This would be quite amazing, because in Germany at least, I think on an average people pay like 1/3 of their salary for rent, even if it's 1/4 of their salary. And if you can pay that by dividends, that is quite the freedom that you get there. Quite the freedom to choose a job that pays less but that you like more, or choosing, you know, whatever you want to work on. So money will not be the deciding factor anymore. So you don't have to do a job just because it's paying more or something like this. So this kind of passive income definitely gives freedom, and that's why I think it's so important to start investing early, very early. I mean, I started way too late, but that's the whole reason why I'm doing this YouTube channel, and also why I built Trésor One, is to make it easier and more helpful to young people, or anyone really, to start investing. So the hurdle to get into is much lower. Hopefully a little bit lower with the tools I'm doing, the tools I'm building, and maybe the videos that might inspire and answer some questions or fears that people might have. So this is completely passive. I'm looking at the portfolio regularly because I'm building the tool around it, but in general, I'm not doing, you know, much different. I have every month I automatically put money in, and it just gets, you know, I buy more shares every month, and it continues like this. So if we look at, for example, the All World High Dividend Yield, this is the complete time that I owned it, since December last year, in this portfolio. And as you can see, it rose a little bit from like here 49 euros to 53 euros at its height when I owned it, and then came the Corona crash. And as you saw, as you can see here, I bought every month. I bought in December, I bought in January, I bought in February. Then this whole thing started with Corona, and then I immediately started to buy more. I started to buy twice a month, and then it went down, and then I immediately changed to 4 times a month. So I increased my purchasing, my investing here a lot, because I'm buying for the long term. I'm not buying here to sell next month or in 3 months or next year. I'm buying here to hold it forever, to hold it for 40 years, to maybe give it to my children at some point. So when this falls down here, this is an opportunity for me to buy cheap, because I believe in our economy, in the world economy, and I believe that in 10, 20, 30 years, this will be much, much higher than it is right now. So if it goes down, I'm buying. I'm buying all the time, but if it goes down, I'm buying more. So as you can see here, this K, it's German for, it's an abbreviation for the German word Kauf, so for buy. So it's basically buy. And then it was like 4 times a month here, as you can see. And I put more money in as well. So if you look at the amounts that I paid in the beginning, I started here with 150 euro, 300, and then I immediately increased my spending. I had a big one time here, 2,000 euros, and then it was like every now and then 300, 400, 300, etc. And this continued basically until last month, when I stopped buying 4 times a month. I slowed it down now to 2 times a month, and this is what I will continue to do now until I run out of money, let's say. So the money I have in the account to buy more is getting low, so I have to put in more money now. But I will definitely, hopefully, be able to keep that pace up in order to reach the goal of 30,000 euros this year, this stretch goal. And this kind of buying here during the downfall enabled my average income, or my average buying price, to be much, much lower here. Instead of like 50 euro that I paid on average per share, I now have a buying price of 42 euros and 60 cents, which means once the market recovers, I have much more gains in general. So currently, yes, I'm down 1.8%, 126 euros in this particular ETF, but basically the baseline that should be around here somewhere, I'm much sooner in the green, because I bought more when it was down. But again, I'm not trying to time the market here. I'm not trying to like pick the bottom. As you can see, this was the bottom, and I did not buy anything here because I don't know where the bottom is. No one knows. And trying to time this and buy everything there, of course it would be awesome, but the chance to miss is much, much higher. I can't time the market. You can't time the market. So what I do instead is I dollar cost average. So I buy in regular intervals. And if I decide to buy more, so for example, let's say I get 10,000 euros now for whatever reason, and the prices are low enough right now, and I say, okay, I want to put all of this to work immediately. I will not buy 10,000 euros right now. I will probably stretch it over a month or 2 or 3 even of regular buys. So I dollar cost average the buying price. I basically average the buying price between these ups and downs that the stock market is doing. That is what's called dollar cost averaging. So, and you can see this basically put to work here with these multiple buys during the time where I owned this stock. So let me try to remove this. You can't even see it on the screen, I think. Never mind. Okay, so this is what is happening with my portfolio. We have a dividend record. The value gains are negative right now, so I'm losing. I'm like 3.7% in the red, but that's completely fine. It's not the number I worry about. It's not the number I take care of. This is the number I take care of. In total, I earned 216 euros in dividends, and this is the important number for me. And this is the chart I look at. This is the most important chart for me in this portfolio, and I will continue to do what I did in order to make this grow. that's the update for the portfolio. Let's get into one news item that dominated at least the German news, but I think also internationally a little bit the news, and that is Wirecard, because it created some feelings also for me, and I believe that a lot of people might feel the same way when they see a stock dropping that. So what happened? Wirecard, a German payment provider and even bank, they lost like 1.9 billion euros. So their balance sheet was wrong, let's say, and it was what's it called, like EY, and EY came to them and checked all their banking. I forgot what the correct English word for it is. An audit. It was an audit, and they couldn't find 1.9 billion euros. So yeah, 1.9 billion euros. They basically didn't exist, and the institutions where they should exist said they don't know anything of that. It's fraud or something like this. So by now, I think Wirecard is broke or insolvent. Like they will remove the company. That's probably the wrong word. I only know the German words here, but it's insolvent. They will probably have to shut down the business, sell their assets, etc. Maybe it gets bought out by something because their business model in general works. But I don't know what happened there. I'm not too much into it. The problematic part here is what the stock is doing. So for us, this is the Wirecard stock. And for us investors, it was trading here at 90 euros, 100 euros. And in the past, it has even been at 200 euros almost. So now we are here at 100 euros, and then this happens. They should have, showed their figures, showed their numbers, releasing it to the public, and they were delaying it, and then they basically said, yeah, there are 1.9 billion missing, everything's fucked. So the stock crashed down immediately to here around, what is it, €40, I think. Is this dollar? No, this is euro. So €40, showing like 98% decline. So I own, in a different portfolio, I own a little bit of Wirecard, not much, but I've never seen this loss. A loss like that, like in relative numbers. I mean, 98%, that's just insane. The thing is, I mentioned this in another video regarding the Corona crash. Like crashes like these present also crazy buying opportunities, but it always depends on why the stock is crashing. So for example, during the Corona time, everything was crashing, and there were just a few companies, or many companies, where this was a big buying opportunity because they will survive this and they will be better afterwards again. Even if it takes 1, 2, 3 years, if the stock goes down 30, 40, 50%, if a stock goes down 50% and this only is for 3 months, 6 months, maybe a year, or you're pretty sure about it, let's say, for example, companies like Microsoft, Apple, companies that have a digital business anyway, they go down 50% and you buy at that price, it means when they go back to normal, you doubled your money. In order for a 50% drop to recover, they have to rise again 100%, which means you double your money. With this kind of thing, it's insane what could happen here. So, for example, Carnival was also these cruise lines. They were of course crashing like 80%, and if you buy a company at 80% loss, you will make up, I don't know, 20 times your money, I think, something like this, or 5 times. So these are huge gains, opportunities, but they also have a lot of risk. And Wirecard here, I think, poses for many people that think in these terms a buying opportunity that creates a little bit fear of missing out. Because look at this. Here we have it's at €1.30, and now it rose in the last, what is it, from in 3 days 170% to €2. So even if a stock comes from €1 to €2, that's still double the money. And if if the stock was at over €100, then price spikes between like €1 and €4 can create opportunities to double, triple your money immediately, like in a day or two. But don't get me wrong, this is gambling. This is complete and utter gambling. There is no other way around to say this. No one can predict what happens here. I personally don't buy anything. I will not do this kind of stuff, and this is what I mean. I have a little bit of FOMO of like, maybe I should buy because it's such an important part for the German, not the economy itself, but let's say the German tech company culture, or tech company, how do I say this? The reputation a little bit, it's Germany and Europe, they don't have big tech companies. We don't have big tech companies. We have a few, maybe a handful, but they are nothing compared to the US companies. So any company that has a nice tech digital business that is good for Germany and Europe, and that creates a little bit of independence to the American companies, is something that the government and everyone wants to push and wants to keep. So maybe they get bailed out in some way or another, or they get bought out by a competitor or something like this. So it could be, and it creates a little bit of desire in me to buy whatever, €500, €1,000, maybe €5,000, because you have double, triple, or even tenfolded. Like if this goes back to normal, then we are talking like, okay, this will make people rich if you put in rich, or let's say a huge jump in capital. You will skip many, many years of investment if you are able to make a deal like this. If you put in 10,000, 20,000 euros into that and it goes back to normal, well, yeah, that's a shit ton of money you will get there. But again, I'm talking about this not to make you buy this, not at all. I'm saying this because there are a lot of things that create buying opportunities. The important part is to look at it and see, is this something, like, is there a good reason that the stock fell? And there is a very good reason in this case. And if the company goes down, completely shut down, you will lose all the money that you put in. And this is a huge, huge risk. So if the market in general goes down, everything, then there are a lot more opportunities, in my opinion, where there are companies dragged down with the rest of the market that actually are not impacted by the crisis at all. So there are companies that are not negatively impacted from a financial perspective from the coronavirus, yet they went down in value. So this was a buying opportunity. But this is not, even though this might present a lot of opportunity for gains. And there are probably people or companies, people buying this, and maybe they get some gains out of it. But again, this is gambling. This is complete gamble. They could also lose it completely. And I'm not even 100% sure. I think in Germany, you can't even sell the stock anymore. I'm not sure about buying. So I think trading was halted. It was for sure last week. I'm not entirely sure right now. But these kind of opportunities or situations are always dangerous for some people to buy or sell or not. So I still have my stock of Wirecard simply because it makes no sense to buy to sell yet. Even if I could, I will lose 98% of the value. So it doesn't make sense to sell it. And in the very unlikely scenario that it recovers, I got my money back, but otherwise it's lost already, basically. So I'm not doing anything. I haven't sold anything. I haven't bought anything. What I sometimes think about to make use of this kind of stuff, or not particular this, but let's say a company like Carnival goes down and you think it will survive. and might thrive even 2, 3, 4 years from now, and you want to take the opportunity to buy it. Let me pull up the Carnival stock so I show you. And sometimes I think of a separate, like, kind of like a gamble budget. So this was when Corona hit, right? Went down 80%, and then you can already see here already 160% in gains, and it's not even recovered yet. Went down again, but yeah, who knows? Who knows if it goes up or not? I personally bought a little bit here because I think it will go up eventually. But here is the thing. This is also, for me, this is not entirely like Wirecard, but this is also has a lot of risk in it. And the important part for me there is that I only put money in that is okay when it's lost. So I didn't put like 20,000 euros in it or 50,000 that will hurt me when it's gone, but will make me rich to my standards if I succeed. This is not the way I invest, not at all. If I put, let's say, 200, 500 euros in it or whatever, if I lose that, it's not the end of the world. It's money that I don't need, that I can use for this. And if it's successful and I get like, I don't know, 10,000 euros out, maybe 5,000 euros out of it, so make 10 times the money back or 5 times the money back, then it pushes my overall performance quite a bit. But that's about it. So separating a very small amount of the money you can invest into a, let's say, opportunity budget, or maybe even gambling a little bit. So if you, I don't know, have like 5,000 euros on the side that you absolutely don't need, and with that money you can gamble a little bit, that might be something where I think we could scratch that itch without a lot of danger. So what I'm currently thinking about is like taking, I don't know, 1,000 euros, for example, and with that I can make these very, very risky bets, and if it's lost, then it's lost. But if I make, for example, 2,000 out of it, I get out 1,000 again, and then with that rest of the money, with the, let's say, the win I did, with that I can do whatever I want. So I didn't put any money at risk that I would need or out of my savings or whatever, because I still have my investment strategy, and that is this strategy that is continuously buying every month, maybe even every 2 weeks, dollar cost average into the market, into ETFs. This is the investment strategy I follow. The stock picking or taking advantage of buying opportunities, very, very risky buying opportunities, is something that is definitely, let's say, should be a side project of your side project. It should be not your main focus and not where you put the main money in. It's also something why, for example, I don't buy crypto. Same thing for me. I personally have no idea how it will evolve, and it's definitely, for me, this would also be a gamble. It's too risky. It goes up and down, very fluctuating, so I don't put money in at all. That was my 2 cents to the whole Wirecard situation and the FOMO with stock drops like these. I think by now everyone is clear that you should not buy Wirecard. But again, I can't give you any advice. I'm not a financial advisor, so do your own due diligence. But I think by now buying Wirecard, is definitely a gamble. A week ago, I think you could make an argument that maybe it goes up again or something like this. But either way, that's not the focus of this portfolio, and it's definitely not what I will do or share here on YouTube quite a lot, but it's still something to talk about. So I hope you enjoyed that, and I hope your portfolio is making some progress on the dividend side as well, if you're focusing on that. So thanks again for tuning in again. See you in the next one, and have a good week. Bye.